Hi everybody, welcome to another update on the Gold Forecaster Index, the holy grail to predicting gold prices. So in my last video I said that you should steer away of gold and get into more tangible assets like energy, fertilizer, all of that. And it looks like I was right. So gold has dropped from 1730 to almost 1600. So if you were in gold miners, you are feeling pain. Now let's see if the pain is over. So as you know, the gold forecaster index is an index that's based on leading indicators. So we can perfectly predict what the gold price will do in 2 months to 6 months from now by just looking at this chart. So don't make it yourself difficult. Just follow this chart. And the chart gives us a new data point, which is lower. Okay, this is a new data point. We are not going to enter the gold market. Taylor rule rate, we have a new data point here. It's dropping. Still at a very high level, so that means there's still a lot of inflation in the system, but it's starting to drop. We need to monitor this in the next quarter to see if it plunges. But this could be bearish for gold, but we are still at a very high level. Misery index is dropping, which is also bearish for gold. That means that the unemployment rate is improving and inflation is coming down. Here we actually we have a new data point here. I haven't seen this yet. It's coming a bit down, but it's still in positive territory. So this is the productivity. Productivity is still very bad, but it's improving. So as you know, this chart tells us that you should buy gold if this indicator is in the positive territory. For example, here it's negative territory, then you should sell gold. Here it's positive, but just barely positive, then you should be in gold. And now it's dropping a bit, so it's becoming more bearish gold right now. Hedge funds are still selling gold, making a new low. So I expect gold to drop here to that orange line. COMEX number still dropping, so not a good sign. LBMA holdings also starting to fall, also not a good sign. The only sign that's positive is that China is still buying and India is also buying silver. So let's see if India keeps on buying, because this is really bullish, but not sure if they will keep buying silver. If they stop buying, then it's over. SLV has bounced a bit, so that's a good sign. Chinese demand is also increasing a bit for silver. Yeah, we are nearing a bottom in silver. I can see it, but I'm not buying yet because the gold forecast index is still pointing down. COMEX is also approaching lows, so watch for a bottom here, and then it's time to get back in. Wait for the sign. US mint sales are still very low, still at all-time lows for gold and silver. Premiums are skyrocketing, but yeah, this should be a bottom based on the premiums that we see. So we are going to wait for the bottom and then we get back in. As simple as that. PSLV premiums were not that good, still in the negative. Managed money shorts are positive. They're could be a short squeeze in gold, but I mean, it could squeeze and then go up a bit, but I don't think the COT report is that important. Macro economy is more important than those COT reports. This is more important because we don't have any backwardation. Backwardation means that go for rate is negative, but we are in the positive, so that's bad for gold. And Swiss franc is going down, tips rate going down, real yields are falling, all bad for gold. On the seasonality chart, we see that this should be a good month to buy. So this is the bottom, and we should go up until February. Same with silver, we should go up until next year based on seasonality. Okay, then let's talk a bit about the stock forecaster index. I think we should look at this index and use it because it can predict the stock market. And as you can see here, this is the stock forecaster, and it is currently a bit above the zero line, so stocks should be going up, but at a very slow pace, and it looks like it's almost going negative. So watch this. You can look at the valuation models. Forecast of Yardeni still saying that we are going to go up. Earnings also important to take a look on that, and they are not looking that great. We see that the earnings are starting to fall, and this will push stocks lower probably. But we will see if this continues to fall or not. But it doesn't look that great. Put call ratio was good today, but still stocks are falling. Mannarino index very high risk. Housing market is still crashing. Prices are dropping, so that's not good for the economy. Capex is still very low, so no uptick here. Smart money is telling us to sell. So for next month, we are seeing a drop of more than 5%. And yes, stocks are falling today. So smart money seems to be right. This here tells us that stocks only have about 3% annualized growth over 10 years. So there's still growth, but not that much, only 3% per year. Labor market is still strong, as Powell is saying, very, very strong labor market. And you can see that here. They are not sacking the temporary help services. However, profits will come down. You can see the orange line is pointing downwards, so corporate profits will probably go down. Then liquidity, as you can see here, the stock market now just follows central bank liquidity. The latest data, which is the red line, that's the liquidity. It's bottoming out and making a bottom here, so stocks should hold this level currently. Good spending is pretty okay. It had a drop, but is now back at zero, so I don't expect the unemployment rate to shoot higher. So economy is still pretty okay. Also watch the Citigroup surprise index, very important index. It tells us that we are at 13.5, still above the zero line, so we're still okay. And you can see that this correlated to the 10-year yield. So if you want to predict the 10-year yield, watch the Citigroup surprise index. If it drops below 0, then the 10-year yield will come down. Okay. Next up, I want to talk about the bond forecaster index. I think that we are starting to top out in bond yields. So this is the bond forecaster. It has gone below 0, and now we should see a top in bond yields at some point. Here we already see it in the Taylor roll rate. It has made a top. So typically when that happens, here is the top, a few months later, then bond yields will drop. That's always the case. First the blue line tops and then bond yields drop. Okay, here is the second derivative. When this goes negative, then you can buy bonds. So it's still not negative. I'm waiting for this to go here, and then you can buy bonds again as bond yields drop. This is also a nice chart here. Follow the blue line. It's going negative, so bond yields will drop. We will follow up on this. Copper then. Copper is not doing that well. Economic activity is negative, bad for copper. However, warehouses have had a good week, went down, but let's see how this week will go, because I don't think that base metals are that good right now. China is slowing down, so I'm not in base metals right now. Power consumption is also down, so not a lot of demand for power in China. Shanghai was also starting to break down. Let's take a look. You have this triangle pattern and it's almost starting to break down. If this goes here, then we have a big problem. GDP is also slowing down. Very bad news overall. Scrap copper premiums. As you know, when this is very high, this index, then copper will probably drop. When this is low, then copper goes up. So be aware of this. Copper could drop again at this moment, even though seasonality is very strong. We are in November. So it's a mixed bag. Tanker rates are very good. We stay in the tankers. Tanker rates are rising. Yardeni forecast, let's take a look. Yeah, Yardeni hasn't updated this chart for a while. Still thinking that stocks will go up. Inflation. So inflation starts to top out. A lot of the indicators are topping out. But when you look at the 10-year break-even, it's starting to rise again. So I don't think inflation has stopped. It's increasing again. So we are going to see a second wave of inflation. GDP is still slowing down. Let's see where the bottom is. And China airplane data, very important to watch this, because this is important for copper and oil. And it's still at lows, so a lot of lockdowns. I'm bearish base metals right now. Central bank balance sheets. Oh, so the euro has actually increased the balance sheet a bit. European Central Bank has increased it a bit. USA is still dropping and Japan is completely selling off all the assets. So we are still in a QT environment. And that will be bad for gold and stocks. Now, this is interesting. I haven't seen this yet. Something is happening in the commercial paper sector. So whenever you see these spikes, then there's some problem in the lending market, in the credit markets, and this is actually getting worse. So something is going to happen. Defaults, maybe. Next up, we look at the rate hikes. So we always follow this chart. Rate hikes are going to keep on increasing. We are currently at 3.9 Fed funds rate, so here, and there could be another 50%, 50 basis points hike here. So it's not done yet. More pain is coming. Trade deficits. Let's take a look. Services a bit down, but goods deficit is now increasing again. So more deficits. This is actually good for gold and bad for the dollar. Let's see how much that this will drop again. But when you look at the air freight index, it's still pointing up. So not sure if the deficits will go down or up. I think, yeah, it's probably going to be flat around here based on this data. Export and import price index, the gap is still widening, so that's higher deficits. But prices are coming down. So the prices are coming down, which means that there is a peak in inflation for the moment. Money supply is dropping, so disinflation. Market bottom is in. So I wanted to talk a bit about these nice charts from Game of Trades. I don't know what they mean, but it tells me that there are a lot of bottoms. The market bottom seems to be in for the moment. So gamma exposure, very low level, could be a bottom for stocks. Very pessimistic. Market is very pessimistic, so this could be a bottom. Liquidity cycles tell us that this is a bottom as well. We are in capitulation, which means this is a bottom. Dollar is very high and will probably drop in the coming years. Asset managers are positioned very short, which means they will be squeezed out. Put call ratio, very high puts. So everyone thinks that the market will drop, but probably it will go back up. ISM prices paid at a low, so probably going up. Put call premium again, a lot of puts, so this is the bottom. High yield bonds. After strong advanced decline trust, I have no idea what this means, but it looks like a bottom. A lot of insider buying is coming here. So insiders buy when we are at the bottom. This is also a bottom for the fear and greed. Very much discouragement amongst investors. So this is a lot of discouragement. So that means that we are at the bottom. Smart money is buying and dump money is selling. So bottom, McClellan oscillator, no idea what this means, but it tells us we are at the bottom. Here, insiders have stopped selling, so we're at the bottom. Hedge funds are short, so we'll probably get squeezed out. Speculators combo, no idea what it is, but it's very low, so we're at the bottom. AAII bull ratio, also a bottom. Stocks are all in correction, which means they will go up. Highest number of puts, so it will go up. Another put call ratio. We are completely risk off pessimism, so we should be at the bottom. And another pessimism chart. NIME sentiment very low, so we are at the bottom. So this is actually a very good time to get in stocks because everyone wants to get out. Now, which stocks should you buy? Of course, we buy the stocks with the lowest PE ratio. You recall my VGC project, Value Growth Catalyst. We only buy stocks with the lowest PE ratios because they give us the highest return, 200%. So that's where we are going. Don't buy the high PE Cathy Wood stocks, tech stocks, because those will give you less return or negative return. So very important, just do it. Buy the cheap stocks. Now we are here and well, stocks could have a bit of a crash here and then probably at the end of the year we will have a massive bull market. So this will shake out all those dump investors and then you should go long because we will have a bull market for next year. Gold will keep crashing as you can see here. So we are not in gold. Now, very interesting is we know that the SEC is trying to delist Chinese companies. I have looked at this. So here's the list of Chinese companies that you shouldn't buy because you won't be able to sell them. So be aware of this. You can actually even subscribe and have email updates. But I'm not buying those stocks, even though they are very cheap. Now on to the energy markets. We are not buying gold, but we are going into energy. So I'm levered up on oil and gas. Now, why do I do this? You can see here, trader positioning is now at a low. And you can see that this correlates with a low in oil prices. So I expect this to go higher by next year, probably above 100 oil. Another thing is that shale gas supply is going to be flat going forward. You can see here the decline rates, very low decline rates, but as we go into the future, these decline rates are rising. So it's very difficult now to keep these wells at a high production. So at some point, the capex is going to be so high that production cannot increase anymore. Everything is drilled right now. So there are no uncompleted wells and capex is very high. So I'm playing this by buying ICO gas. So that's Canadian gas. As you can see here, gas is going to keep on rising in the coming years, up to $8. So I am buying pure day energy for that. And The reason is that gas supply is not going to increase, so gas prices need to rise. Also, gas will go up because there's no supply going to Europe. So as you can see here, Russia gas supply is still at a very low level, and a lot of LNG needs to be imported. So this was very small here, and that has increased to this level. And they will need to buy more LNG to get this back up. So it's looking very good for gas. This is Russian gas exports. So a year ago, they said gas would go up for Russia, more Russian exports. But this year, they're saying that gas export will go down. So it's looking very good for gas. There's no supply. LNG is expected to be above the $30 per MMBTU. So LNG looks very good. And LNG capacity is maxed out already. So gas will go up. And to end it, we are still at a very low capex for commodity producers. You are here, and this cycle will probably rise in the coming years. So it's not too late to get into energy. As energy rises, then the capex will also start rising. So I'm still saying avoid gold and get into energy. And that was the update for today. And I'll see you in the next video. Bye.